Well, they have pointed out 10 key risks that could derail the uptrend that we have been seeing in the Indian equity markets. Obviously, they are saying that this is not something that is immediate threat for the economy or for the equity markets, but on an aggregate level, they could derail the rally that we have been seeing in the Indian markets. And they are saying that Indian markets are hot and they have been gaining for 13 out of the last 15 years. Despite this risk, they continue to remain overweight because India has the strongest growth story in the emerging markets as per them. So, what are these 10 key risks that they have highlighted? Now, firstly, they are saying that there could be a stress on banking sector which has been increasing of late. Apart from that, banks are also struggling to grow deposits. Private sector capital expenditure has been sluggish. Weak and concentrated foreign investment is one of the key risks that they have highlighted. Unequal consumer growth, urban is growing more than rural, is something that they have highlighted. Apart from that, there is always a risk to the earnings. When it comes to ESG, they have said that there have been few instances where corporate governance for Indian companies has been in question. Apart from that, they are also saying that there could be sudden changes in the regulations which could impact the market. Again, market concentration and macro risk. These are the 10 key risks that HSBC has highlighted. But again, they have categorically said that these are not something which is an immediate threat. But in aggregate, they could derail the rally that we have been seeing in the Indian markets.
You know, Samit, it's always a risk in the economy when you have factors like unsecured loan is growing, you have factors like, liability franchise in a sense is not really moving in the right direction for the bank, and if the private sector capex is not picking up. So, any economy, any market will always have risk, and I think HSBC is pretty much flagging off the obvious. So you must say and you must recognize them. But I don't think these are points which in a sense right now are going to be occupying a lot of center stage. However, I continue to believe that the point number 3 which just came on, which is that there is sluggishness in the private sector capex, I think that is something which really needs to be recognized. And I just correct me if I'm wrong, I think Siemens numbers from last 3-4 quarters have been flat.
Yes.
Right. Thermax, despite whatever they're claiming in terms of their pivot from new economy to green and new design and new technology and new verticals getting added up, they've not done anything really earth-shattering in terms of meeting market estimates. It's only ABB which in a sense has continuously surprised, but none of the large big privates, including L&T, they've really surprised us. So I think from a market standpoint, that is something which is important, which is that the private sector capex is sluggish, and this is something which really, it's a matter of time, could have an impact on the entire capital good and the machinery space.